Let's talk about long-term assets and do a quick overview about this topic. There are two types of long-term assets: tangible assets and intangible assets. Tangible assets are physical assets that we can touch. Some examples include land, building machinery and equipment, furniture and fixtures, and land improvements. Intangible assets are assets that you can't touch, so these are non-physical assets that are still important and grant you certain rights. Examples include patents, copyrights, trademarks, and goodwill. In this chapter, what we're trying to do is figure out how do we account for these types of long-term assets. Let's imagine that we bought a forklift, so this would fall under our tangible assets, and this is a machine. We're going to use this forklift to generate revenue for multiple years. As we use this forklift, it'll experience some normal wear and tear and get dinged up a little bit. Sometime later, we decided that we don't really want our forklift anymore, so we'll just sell it. So really, we have to think about three phases for accounting for long-term assets, and I'll just use the forklift as an example. In the first phase, we'll acquire our long-term assets. So we'll pay cash, so cash is going to go down, we'll credit cash, and now we have an asset, so we'll debit PP&E. Second, as we use our long-term asset, we got to think about two concepts. First, we're going to be generating revenue over multiple periods. Second, as we use our long-term assets across multiple periods, well, it's going to get dinged up, right? So wear and tear. And we got to match the expense with the revenue generation process, and depreciation really takes into account of this. So we're going to debit the depreciation expense and credit a contra asset account called accumulated depreciation. Finally, we're going to think about selling our long-term asset. When we sell our long-term asset, first we're going to receive cash from whoever buys it from us, so we'll debit cash. Next, we'll credit PP&E, because if we don't have a PP&E in real life, we can't have it in our books, so PP&E goes down. We'll also debit accumulated depreciation that's associated with the PP&E. If you don't have a machine in real life, then you can't have the PP&E nor any accumulated depreciation on the accounting books as well. And if the book value is less than the cash that we receive, we'll record a gain, so we can credit that gain on disposition of an asset here. Well, what happens if there is a loss? We'll still receive cash, so cash will go up. We still have to get rid of the PP&E and the associated accumulated depreciation, so we'll always credit PP&E and debit accumulated depreciation. However, instead of crediting a gain on the disposition of asset, here we will debit a loss on the disposition of an asset. So in this chapter, we're going to look all about the three phases: purchase, usage, and sale of long-term assets for both tangible and intangible assets. And now you have an overview about long-term assets.